Let's move on before we run out of time. Let's talk about Caesars Entertainment. I love their symbol CZR, and I guess the Z is because they couldn't get an S, maybe.
Yeah, I mean, I guess it sounds more like Caesar.
Yeah, yeah, that's true. I am shocked on the short on the float. It's 17.6%.
Wow.
So they're thinking that Caesars is going to have a hard time. I know you got some information, I think, on the earnings, so I'll save that for you when we get to it. But we do see that they have no PE ratio versus 26 for the industry. Price of sales 0.5 versus 1.4. That's a positive. Price of book value 1.5, half the industry at 3.1. And price of cash flow is 4 versus 7.3, so that's another positive. Now, the PEG ratio does look very good for Caesars. That's 0.7 versus 4 for the industry. Now, Caesars has no earnings over the past 12 months. The industry was up 36.9%. Sales for Caesars climbed by 2.1%, not as good as the industry growth of 6% there. Now, this is crazy to me. You see some bad things, and then you see the 5-year earnings per share estimated growth from the analysts, 178%. I don't think I've ever seen one that high versus 9.2% for the industry. So what do the analysts see that Caesar is going to grow their earnings in the next 5 years by a large amount? I think they're building things in China or something maybe, but I just, that's a hard one to kind of justify. And I'm disappointed. They do not pay a dividend. No yield there at all, so they don't pay a dividend. Balance sheet, current ratio 0.8 versus 1.4, so a little bit weak. Not a big concern at this point in time, but I'd say watch it. Debt to equity could have very low equity, but it's 7.1. The industry is 6.1, so something going on there with the high debt to equity levels. Maybe these are just high debt companies with low equity companies there. Intangible assets, I got to point that out, it's very high, 45.6 versus 9.3, so a lot of intangible assets. We do see the net profit margin for Caesars is a negative 4.4%. The industry is a positive 5.4. Return on equity also a negative, unfortunately, 14.3 versus 28. And then free cash flow was 493 million, I think that would be, versus 897 million for the industry. So all over the board on this one. I'm not getting a good feel because I can't feel anything yet. It's just many different factors here.
Yeah, and I was kind of surprised by this. They do have other. Obviously, they have Caesars as their staple name, but it looks like they have a lot in Vegas. Actually, they operate Paris. Looks like Las Vegas.
Oh, Paris.
Planet Hollywood, the Cromwell. I know Nobu Hotel is kind of part of Caesars when you go in there. The Link, Harrah's, Las Vegas, Flamingo, and they're in Atlantic City. They're also in Reno, Arizona. They have Harrah's in California. We actually have the Harrah's in Southern California that is run by Caesars there. So it's not just the Caesars name. They have various other entities or establishments that they do run. But looking at the current price here for Caesars, again, their ticker symbol CZR, it's $25.05, and this stock's been interesting. I say interesting because year to date it's up about 7%, but over the last year it's down 25%.
Whoa.
Over the last 5 years, down 73%. Back in 2021, it was trading at close to $120 a share. So I mean, it's definitely been hit very hard.
And you saw the 10-year, right?
The 10-year, we have a 138% gain. So, I mean, it's...
I show 153% gain. I'm not sure.
Maybe they used to pay a small dividend, and then maybe they cut it during COVID or something.
And again, it's another one. When Harrison was here, we're talking about the holding things too long.
Yeah.
I mean, I'm not sure when, but this should have not been held for 10 years.
I mean, if you would have hit its valuation, maybe not even at the top at 120,
right.
But even, 80, 90, we'll say, and you got out and paid taxes, you'd be better off than, again, still sitting at $25 a share.
Understand what you own.
Yeah, and going forward for the business, this is kind of coming back to your point about the earnings growth from the analysts. And it looks like in December 2027, they're estimating 75 cents per share. And I say, coming back to your point, in 2026, they're estimated to lose 3 cents. And there are less analysts in 2028, just 3 of them. Then they're estimating growth to $1.82. Just one analyst in 2029, but they're looking for $3.79. So there's something going on maybe with the accounting of this business that occurred that's allowing for very big earnings growth for Caesars. But if I use that 75 cents as that target earnings per share, we get a target sell price of just $12.45. So it is still expensive based off of those 2027 earnings. And kind of to your point, the range here is $11, or not $11, that'd be nice. 11 cents is the low, and the high here, $1.79.
And what was your 2027 number?
75 cents.
Okay, because I show here for December 2027 $1.10 from 4 analysts, but the range is ridiculous. The low is 44 cents, and the high is $1.79. So I don't
I have 11 analysts, so mine's going to be a little bit stronger of a number.
Yeah, you got much. Isn't it funny how different services can come up with different things that are so vast? And it doesn't happen very often.
Yeah.
But that's, again, why we don't just check one. We do look at 2 to try to come up with something. And, again, I like the 11 analysts better than the 4.
Yeah, and one thing that is interesting about Caesar's business, but it could get hit, is the Caesar's digital. Their adjusted EBITDA, or I'm going to say kind of cash flow for simplicity, for the period came in at $85 million. That was compared with $20 million a year ago. And essentially, that's going to be your kind of online sports book and online gambling. So Caesars has that platform. But again, that could get hit, and it could hurt that future growth, because we know prediction markets, I think, and the data has kind of shown, it's stealing money from the online sports books.
And I think it will steal some, but not all. It's kind of like back, I don't know, during COVID, like, oh, it's over for the malls. No one's going to go to the malls any longer. And no, people like to go out and still shop and do stuff in person. I think the same thing here. You can gamble on your phone and very quickly, but it's still a lot of fun to go to the casino and have all the excitement and place the bets there and watch it on the big screen TV with everybody else. I mean, it's just something, entertainment.
Yeah, and it looks like Vegas is still doing well, but it has slowed or declined. I mean, there was some data that came out for January looking at gaming win on the Las Vegas Strip. It actually fell about 11% year over year. And what gaming win looks at is essentially the total of all cash and property received from the operators or the casinos versus what they paid out. So, I mean, to have an 11% decline, that could be a little bit of an indicator of revenue maybe slowing for some of these casino operators. I'm not sure how much they're doing in restaurants and shopping and the shows, but last time I went to Vegas, there were still plenty of people there. It's just, I think it got so crazy and so attractive that, we're kind of normalizing.
Yeah, and I would still like to compare the numbers. I know you don't have it, but compare the numbers to 2019, before the craziness of COVID started. Because what you had COVID happen, no one did anything, and then they
It's getting too hard to look at 2019. That was 7 years ago. Inflation's going to be too difficult to look at those numbers.
It's true, but you got to look at the whole numbers there. So there's a closing bell.